everybody, what's up? We are back with another stock analysis. Today we'll be looking into Netflix. So, couple announcements. First, I am back home for the week. I'm on spring break. I thought I would have a lot more time to record this week, and turns out I wouldn't. So this is my first video of the week, which kind of sucks, but we're going to get through it. So looking at Netflix today, they've seen insane growth over the past 2 years or so. They were trending a couple days ago. We're going to do a full financial analysis and see what they've been up to. So anyway, getting into it, let's see how Netflix is doing. So Netflix is video streaming primarily. Everybody knows what Netflix is, I would like to think. First of all, some industry metrics. Number of subscribers has seen massive growth over the past couple, or they're expecting to see massive growth, I should say, adding around 25 million subscribers in 2025, which if they can hit those numbers, that is insane. Monthly revenue per user is looking like it'll actually increase slightly throughout the year as well. Paid net ads, I believe, is just the number of people they're adding, possibly, not sure. And then average revenue per user, which is that not the same thing as monthly revenue per user? I guess not. So is also expected to increase, which either way, across the board, good things happening here. So Netflix is a 400 billion with a B dollar company. Pretty large, one of the largest ones we've reviewed. Target price is at $1,000 a share with a 20% long-term growth rate. Really solid. Right now we're at 960, so a little bit below that number. Let's look at their growth estimates. And wow, there is nothing here. That is interesting. So anyway, we will get into their earnings then and see what's going on. I can only imagine their growth estimates are very, very positive. So either way, this company is here to stay and will be performing very well. So we have a lot here to go over. So operating metrics, total streaming, paid memberships is above estimates. Net ads is well above estimates. Monthly a little bit below. What are all of these? Okay, so this is total streaming. Revenue for what I can only imagine is the United States and Canada. Probably beat slightly. Memberships increased a lot. It looks like revenue across the board beat, other than what I can only guess is Latin America, where it fell off a little bit, but also paid memberships increased a ton. So either way, that's pretty solid. Other than that, operating income came in pretty good above. Operating margin beat by a little bit. Cash flow beat, and free cash flow beat by a lot, actually. $300 million beat on the free cash flow. So overall performance was really solid there. We do have the street takeaways. Let's see what analysts are saying about the company right now. So shares were up 15. Oh my God. Shares were up 15% on this earnings report, which is crazy. This came out in January, the most recent one. So let's actually look. Ignore the Dollar General chart there for a moment. So, wow, tons of growth over the past few months. You can really just see how aggressively they've been going up. And honestly, I can't believe that I missed this in 2022. Anybody who didn't think that this was an insane buy when it was down is just dumb. This is one of those moments. It's very similar to Spotify, which actually happened basically around the exact same time. Spotify was down a ton, and this is one of the largest monthly subscription companies ever in the world. And they were down and people didn't buy it. That is crazy. So anyway, very similar. I think any company that kind of revolutionizes their own monthly subscription model is going to be performing enormously well in the future, just because of how good the revenue model is. But Netflix and Spotify have very similar situations there. But yeah, just the growth over the past few months is insane. So let's see what analysts are saying. So adopted a very bullish stance, record net ads, double the consensus, which is insane. Guidance was very good as well. Future growth potential driven by factors such as price increases, the new ad tier of their subscription, and live content and gaming. Other than that, strong balance sheet, good financials going on as well. Let's see. A lot of targets are raised. If you want to read what the individual analyst said, you can pause here and do so. I'm not going to read through everything. We are going to move on here because I do not have a ton of time today, unfortunately. I might be able to get some videos out later, but we'll have to see how it goes. But anyway, looking at their financial statements now, income has massively blown up over the past year, even not even a couple years, where it was kind of steady for a few years with growth. They have increased it by 5 billion in 1 year. That is unheard of. Meanwhile, cost of goods sold barely increased. I shouldn't say that. It still increased by over a billion, but that 8 billion in sales increase is way better. Net income increased by 3 billion in 1 quarter or in 1 year. That is, again, wow. First of all, that's insane. Total shares look like they are coming down a lot too, which is exactly what we want to see. This company has so much money. Oh my God. So yeah, they're at 10 billion almost in cash, 9.5 right now. Total assets are massively at an all-time high. They saw a pretty big increase year over year as well. Debt is pretty significant. However, I would imagine, and we are seeing it come down a lot per year. So I'm expecting their debt to not be an issue at all in the future. Um, with how much net income they're getting, it wouldn't shock me to see this nearly completely minimized within like 2 to 3 years. Um, which, I mean, they might not even care about doing. I'd imagine their interest expense isn't that crazy. So either way, I would say their situation here is perfectly fine. Their debt to equity is probably going to be right around 60 to 70%. But either way, that is perfectly healthy, especially for them. They make so much money. So everything here looks excellent. Let's see the cash flows now. So operating cash flow is actually not too much of an increase year over year at all. So the sales massively went up, the net income massively went up, but not too much in terms of their operating cash flows, which is fine, perfectly fine. We can see free cash flow is also a little bit lower actually year over year. So what that's kind of telling me is one, massive stock repurchases, purchasing a ton of investments. So they're putting their money more into their company than they were the year before. So they matched almost the exact same free cash flow, but everything extra that they had, they completely dumped into the company in order to hopefully boost growth even more. So, in my opinion, that is a great thing to do. Um, even though there was a slight decrease in free cash flow, that is completely fine, no big deal, because they're putting all that money into the company. So, overall, I think that's all I have there for the cash flows. Let's see what the ratios are doing. So, this will be kind of important. And yeah, wow. Okay, ratio improvement was pretty big over the past year. So, 4% increase year over year for the gross margin, 6% for operating margin, and 6.5 almost for net margin. So huge increases. One thing to see is that free cash flow margin did go down. I almost never talk about this, but it is important to note. But again, that is because they're investing more in the company. So in my opinion, that is irrelevant. But anyway, net margin, huge increases. Most important thing right here. Let's see the debt to equity. Total debt to equity is at 72. Anything below 80, which we could see they moved below 80 in the past year, is considered healthy. So that's perfectly fine there. And on that note, I think that is all I have today for Netflix. Hope you enjoyed. Hope you learned something. Let me know what you think about the company. Let me know any other companies you guys want to see me get into. I need suggestions because it helps. So, anyway, that's all I got. Thanks for watching. Make sure to subscribe if you haven't, and I will see everybody in the next video.